Good evening, hello, and welcome to this edition of Moneycontrol Masterclass Ideas for a New India. We're very excited to introduce our panel of speakers today. It's literally a dream panel, the biggest voices in India Inc. I'm very happy to welcome Kiran Mazumdar-Shaw, the chairperson of Biocon, KV Kamath, the former president of NDB, as well as Manish Sabharwal, the chairman of Team Lease Services, three of the most respected voices in India Inc., to tell us about rebuilding India, a blueprint for India's recovery. Thank you all very much. Welcome to Money Control. Hope you're staying safe and well. Kiran, I'd actually like to start to begin with you. The government has finally decided to, go in for a central procurement as far as vaccination is concerned. They've also outlined a budget of 50,000 crore. Everyone above 18 will get it free if they're availing it from government centers. So, do you think this will finally help us vaccinate at scale and therefore, unlock states faster? The economy will come back faster, growth will come back faster. How do you see this panning out?
I think it's been a good step because I think there was too much ambiguity in terms of vaccine procurement and vaccine deployment because it was becoming very complex in terms of procurement, allocation to states, etc., etc. And today I think the government has brought some clarity into that in terms of procurement and allocation. And they basically said the center will procure 75%, the private sector will be allowed to procure 25%, and then the center will decide the allocation to the states depending on various aspects of the pandemic. I think this makes it much simpler, but my request is that there should be a very clear timetable and scheduling of supplies to every state. States need to know how many vaccines they will get every week so that they can plan and deploy efficiently. And my further request is that we should try and have a very, very efficient logistics and supply chain that ensures that the time between the moment the vaccine leaves the warehouse of a vaccine producer to the time it gets deployed at a vaccine center into the arm of a person should actually take not more than 72 hours, if possible. That should be the pace at which we should be utilizing our vaccines. And according to me, vaccination is the only way we can actually get the economy back to normalcy and to get it back on track. So I just don't think we have any time to lose in terms of vaccination, pace of vaccination, and link it to economic revival.
Right. Mr. Kamath, I want to bring you in here. As Kiran said, vaccination is key to kind of bring back the economy. But do you think that will be enough? The second wave of coronavirus ebbing, vaccination at scale? Because, there seem to be deeper scars this time around. Consumption has taken a major hit if you look at the high frequency indicators. So, do you think there is pent up demand that will perhaps come back when states start unlocking, or will people hold back? Will people be more cautious given what they've seen during the second wave? How do you see this playing out? Because consumption, at least in the last quarter, at the height of the second wave, has taken a hit.
I think there are three parts to this. One is, of course, what Kiran said. We have to get people back to work, as it were. That's part of the economic progress principle also. Secondly, I would think that there are lessons from our first wave and what happened last year. We all were believing that this is not going to be something, a very deep hole for us to come out of. But I think both Indian industry and the Indian consumer came out of this in pretty good time. I think those learnings are there. And when I talk to Indian industry, I do not think they are phased this time around. They have understood and set up the protocols that were needed to be set up to run business. And of course, the consumer has also understood where the pain point is. The real challenge is going to be then only in certain key sectors, and maybe the government and the policymakers need to concentrate on that. And that, I would think, starts from the bottom of the pyramid. There's pain, or there will be pain felt at the bottom of the pyramid. I think we're already seeing it in some of the banks, and then it goes up, I would say, to self-employed and that category of people. Uh, the rest of the system, I think, edges. Again, the government's stand in support of in providing subsistence support, I think, is very well taken. So they also have gone through the learning curve last time. So while there will be pain, I think the pain is not, in my view, not going to be as severe as it was last time. And manufacturing India will come back also faster this time. So net, I think the overall pain will be less than it was last time. Last point that I want to make is, we expected that last time around balance sheets would be destroyed. In fact, for a large part of India, other than the areas that I mentioned, and certain specific industries, for a large part, be it banks, be it corporate India, the balance sheets are in healthier state than they were last time. So I think that we are well positioned to face the recovery this time.
Right. Mr. Kamath, just a follow-up question. If you look at the government's estimate, they are confident about it, a 10.5% growth. The RBI has cut its forecast. Banks such as SBI have cut their forecast to single digit. So are you confident of India witnessing a double-digit growth this year, taking into account, the fact that there will be a decline during the April to June period, the first quarter?
Let's look at it this way. Last year we had a bad, first quarter. This year the first quarter probably is going to be bad, but whether it will be as bad as last year, we don't know. But we had a blockbuster last quarter of previous year, I think, which gives us actually the runway to take off into the second quarter of this year. So I don't want to speculate whether growth will be 9% or 10%. I think growth should be healthy if we are able to contain the third wave. If we have a third wave, then I think we will need to reassess. So my own view is, given what Kiran indicated about vaccination and the learnings that we have had, we will probably be able to contain the next wave, and because we have learned what needs to be done to be safe. So I'm optimistic. I'm bullish about the economy because the balance sheets are clean. I think the consumer will come back, and we should have a smooth runway.
Right. Mr. Kamath, you're like always optimistic. So it's good to hear you being optimistic during this phase as well and kind of outline the factors why. Manish, I want to come to you. I remember when I spoke to you in April at the height of second wave, when there was gloom, doom all around, you told us that the darkest hour is before dawn. India will emerge stronger. We're in June. The indicators in May haven't been too great. I think the CMIE data showed that unemployment has touched double digit in terms of percentage. So how do you see India coming out of this in terms of creating jobs? If you can give us your perspective.
I mean, I would just go with what Mr. Kamath said, that the terrible binaries, what COVID does is it forces you to choose between borrowers and lenders. It forces you to choose between the central government and state government. But most importantly, it makes a terrible binary between lives and livelihoods. And as Mr. Kamath said, we've seen the movie before. So corporate India handled the second wave much better than the first wave because we had learned how to work from home. Supply chains had been configured, protocols had been put in place. So I would submit actually the second wave for migrants has not been as bad. For us, certainly as a company, in the first quarter of last year, we went down 20-30%. This year, we have not. And that is why I would submit that there's a lot of noise and bias in unemployment data. I have made the case to you for many years that unemployment is the wrong metric for India because it has stayed between 4 and 9% since independence. Because of two peculiar aspects of India's labor market, which are really shock absorbers, which are self-exploitation. 50% of the labor force is self-employed and it self-exploits. And the other is this labor force withdrawal, particularly which has happened among women, but overall. So I'd say don't look at the unemployment data. Look at GST data. It's the 9th month of more than 1 lakh. March is 1.4 lakh crores. So I think there is obviously there has been a lot going on in the Indian economy for many years. COVID is an exogenous shock, but it is not climate change. It is a passing shower. It's been a painful passing shower. In the second wave, there was a divergence between the economy and society. In the first wave, the deaths weren't that much, but the economy suffered. In the second wave, obviously, we have been scarred as individuals, but the economy, or what economists call hysteresis, which is permanent scarring, at least I don't see that in this at the end of the second wave.
Kiran, I want to come to you. Mr. Kamath, spoke about how he's optimistic about the economy, how manufacturing will come back. I want to talk to you particularly about the initiatives that the government has taken with respect to, the PLI schemes, particularly production in pharma and APIs. What opportunities and challenges do you see here going forward?
Well, I think basically the government is certainly trying to, give a fillip to the pharmaceutical industry, because I think this pandemic has certainly shown up the strength of the Indian biopharma sector, and I think we do need to basically invest in this sectors and opportunities to for the sector to expand. And obviously, this is a very high capital intensive sector, and so uh, capital through this PLI scheme does help. In fact, you ought to look at what's happening in other parts of the world. I think Korea has seen a huge infusion of capital into this sector just to scale up their industry. And I think India also needs to make sure that it continues to dominate the world when it comes to biopharma. And from that point of view, I think the government has introduced this PLI scheme to make sure that we continue to invest in expansion. And I think a lot of tweakings have been done to the policy so that the industry truly benefits from this scheme. And I know that we as industry have been working very closely with the government to make sure that we truly benefit from these kind of incentives that they have announced. We've also requested the government to, mirror the PLI scheme in an R&D incentive plan, because I think that's where also India needs to invest a lot more than it has been doing these years. So I think those are the two things that will at least get our sector into a much stronger state globally.
Right. Mr. Kamath, I want to come to the point that you mentioned about corporate balance sheets. They said you said that they are in a much healthier position. And even a recent report, I think, by SBI also said the same. In fact, it said bank credit growth was multi-year lows because corporates have been deleveraging at a very active pace. They've been taking advantage of low interest rates to pay off high cost loans. So is there a case here to believe that perhaps the next capex cycle will kick off in the next 3 to 6 months? Where do you see the investments happening? Or will companies be cautious because, of the third wave? That's the unknown unknown or the known unknown here. How do you think this will play out?
I think we need to look at 2 or 3 areas where capex will happen. Capex certainly will happen in the infrastructure area, and as to paraphrase what the Honorable Prime Minister said about a year back, India is yet to be built. We have 25 years of building ahead of us. So there is going to be a lot of capex in that building, primarily in infrastructure and in things which are needed to get that infrastructure going. That's one area. The second area is going to be in areas which or in the businesses which were not invested in enough. I think Kiran mentioned about the pharma sector. A whole lot of things can happen. I think we can probably be the pharma producer to the world, and probably we are heading that way in a big way with the learnings of the last year. The next area, as I see, where a lot of spend will happen is what I call the whole digital super cycle, which will be, I would think, an important plank of growth for this year and the years ahead, and also an important employer. Now, interestingly, what is happening is, I didn't talk about manufacturing India, which used to be the largest, where we talk of capex cycle, that's where we. Okay. My view is that there, except for greenfield projects in very heavy industry, in most other cases it will be expansion at the margin. That is brownfield type of expansions. And as you yourself mentioned a little earlier, that it is now mainly corporates are in a deleveraging mode. What does that mean? That they are throwing up enough cash and they are paying back debt. And indeed, they can also use that cash to invest as necessary. One more input there. When I started my career, it took 5 to 6 years for a project to get completed, however small it was. Today, a brownfield project, more than 12 months, I think a few heads will roll. So basically, you have compressed implementation schedule to a level where you can virtually ramp up production just in time at low cost, and that cost is coming or is met out of cash accruals. So we have a completely different path to growth. Even digital India, the digital super cycle will not come to the markets to grow. That will be driven by private equity or non-debt type of instruments. Infrastructure, yes, whether it is government or private sector, will seek funding. Corporate India, by and large, self-financing. Apart from the small and medium industry, where also I think they're learning very quickly that equity is king. We need to get equity if we have got to get, make sure of our business going into the future, and if you are going to get, access to the capital market or wherever. So I think people are learning very quickly. So who is going to be the borrower? The borrower is going to be retail India. The retail consumer is the borrower. And this we have seen globally. Globally, even in an advanced nation, every individual borrows to buy a home, to put things into that home, or his automobile. And of course, then consumption and lifestyle. But the first three, for sure, that is happening in India. But as the economy grows, per capita income grow, that is going to be the key indicator that we need to look at. What is happening to consumption and consumption debt at the individual level?
Right. Um, Manish, I just want to come to you in terms of the measures that the government needs to kind of put in place. Of course, the Prime Minister announced the scheme to on food grains, and a lot of measures have been done by the RBI in terms of injecting liquidity, in terms of taking an accommodative stance. Some economists believe that there should be direct cash support, but the contra view to that is, that is just going to end up making people save. They may not spend. What is your view? Do you think a direct cash transfer will help this kind of helicopter money approach? Is there some other way to look at it?
I mean, I think there are limits to fiscal and monetary policy, right? One of the most interesting quotes, or at least the most inspiring quotes for me during the pandemic was Jonas Salks. He was the inventor of the polio vaccine. And he said the most important question to ask yourself is, are you being good ancestors? And we must remind ourselves we will exit COVID with public debt to GDP somewhere between 92 and 96%. It's been at 70% for 20 years. India has been quite a fiscally prudent country. Now, obviously, COVID is an emergency. When you're in an ICU, you don't ask somebody to quit smoking or lose weight. But my sense is, I think it's important to recognize that RBI has lending powers. It doesn't have spending powers, and its balance sheet has gone from the 40 odd lakh crores to the almost 70 lakh crores, and there are limits to that. So I don't think we can pretend to be the US. The US per capita income is really high. So this year, the US's fiscal deficit is more than our GDP. So I would be careful with dancing at the edge, and we are pushing limits and we'll continue to push limits. I don't think money is a binding constraint for vaccination or for anybody going hungry. But we need to be careful with trying to do helicopter money, substituting for genuine consumer demand, consumer confidence, and stuff like that. So I would say that some of the structural reform around labor, around farms, around privatization, around civil service reform is also should be accelerated and put on the table, because fiscal and monetary policy does have limits. Whenever you borrow, you're not really deferring; you're just deferring taxation. You're just taxing future generations. So I think I would be very careful with helicopter money at this stage. GST 1.4 lakh crores in March was a very important landmark for tax reform in India, and so let's just stay the course. I mean, I know it feels like we're under siege right now, but India is the only country in the world with 20 years of growth ahead of us. We have 150 companies worth $1 billion in the unlisted market now. Neil Shah's work at
Yeah,
Credit Suisse. There are only
100 unicorns.
350. There are only 350 companies in our listed space worth more than $1 billion. So look at the pipeline for corporate India: 142 companies. So I would say that yes, it's been a difficult few months, but I think that there's a lot going on in the world which is going in India's favor. China fatigue is going in India's favor. Global capital is going in India's favor. So let's just stay the course, is my view. Let's not take public debt to 110% of GDP. I mean, stealing from your grandchildren is easy to do, but it's not always the best thing to do.
Right. Kiran and Mr. Kamath, I want you to both to weigh in on this in terms of, do we need helicopter cash? What would be the best way forward?
Maybe Kiran.
No, my view is that it's always easy to adopt these kind of these helicopter cash incentives, or whatever you want to call it. But I think Manish said that as a country we do need to understand that we are constrained in terms of how we go about bringing demand back, or incentivizing consumption, because I think I would rather depend on the economy itself to revive, to generate that consumption, because you need to really get jobs back. According to me, livelihoods will actually get consumption back, and therefore I'm very keen that we open up our economy based on bringing safety back into the workplace, which is why I go back to vaccination. And I feel that, when you start bringing jobs back to the workplace, I think you might be able to then start seeing the, economy reviving. But, starting to hand out, these kind of, cash, compensations, or whatever you want to call it, the direct cash compensation, I don't think is going to be good in the long run. So I really would like to see jobs coming back. And I know that even in our own case, many of us have had to see some of our manufacturing activities being impaired because of the sudden surge of infections at the workplace. But now that we've vaccinated all our employees, I'm seeing, even the manufacturing activity coming back to normalcy. And that itself actually gives you a feeling of confidence. It actually gets people to being much more self-assured, and they feel that the gloom has gone out of their lives. So I really think we need to get back business confidence, workplace confidence, and economic confidence to really get the economy moving.
Right. Mr. Kamath?
Yeah, the terminology, helicopter money, typically illustrated with throwing away money basically to get consumption demand in. Consumption. And then you have a situation where you try to consume things which you don't need. So you get a second maybe car, or a second television set, or things like that, just so that the wheels of production are kept going. I think that's not what's happening in India. At best, this can be called subsistence support. You have food grain support, and this is something slightly on top of that through various means, such as either some direct transfer maybe, or through schemes like Narega. I would think in India these are need-based to tide over a crisis. So I don't think this will be, in my view, actually qualify as helicopter money in a broader sense of the word. I agree that deficits will need to be kept within limit, and the debt to GDP ratio within limit. But having said that, the government has behaved in, I think, a very prudent manner right through this crisis. If you see, the expansion of the central government's balance sheet has been kept, of borrowings has been kept as tight as possible. And what we have worked with is, on one hand, liquidity that is already in the system and is still available in the system. How do you get that liquidity to work for us? One. Second, how does the government provide guarantee support, which then could make use of liquidity and or tide over the crisis? And thirdly, if you see the outcome of that, when we set up the restructuring committee last year, the expert committee, we had, let us say, assumed that X would be the the number of cases that we would have by value. Our number, I would think, will work out to maybe just about 15% of what we had anticipated as problems. And that is true throughout the. So the measures taken by the government, need-based support to individuals, need-based support to corporate India, and the coming back, I think has obviated or will obviate the sort of helicopter money that was needed. And I think the government has always been conscious of how much it should borrow. And I think last year when it announced that it would borrow higher, it did a lot of consultation with the senior economists from the system. And I was there in one of these meetings where you can say that not one economist grudged the fact that government will have to borrow more. In fact, most of them said this is the time to borrow more, leave the past behind and do it. And I think even there, the government has acted in a very prudent manner. So I'm sure they will continue to do what they do and work with the Reserve Bank to make sure that the economy is on a very stable footing.
Right. But Mr. Kamal, just to follow up, in terms of the consumer sentiment, I mean, I agree that vaccination at scale, industries opening up will give a measure of confidence. But if you look at factors such as, the number of bounce rates going up, the number of mortgaged gold being auctioned off, all this indicates, deeper scars that perhaps, the loss of job has also led to a depletion in savings, and therefore people are not willing to spend. So, what do you think will bring consumption back?
Chandra, I am not very sure about the numbers that you quoted. See, to me, it appears that this is the bad news bias that is being talked about. Because somebody else also mentioned to me that, so-and-so bank has advertised for sale of properties. It should reflect elsewhere in hard statistics. The hard statistics are, it should reflect in the default rate of banks. It should reflect in the numbers that the system throws up in terms of NPAs on a quarterly basis. Yes, I did mention that at the bottom of the pyramid, we are seeing that pain. Some small finance banks have talked about pain. Some NBFCs talked about pain and so on. But I do not see massive pain. I was just looking at a number, even as we were chatting, that May automobile sales are up 150% on last year or so. This May also was a shutdown month. So I'm a little confused as to what is actually happening. So I will wait and I will try to look at what next month's numbers tell me. Or latest by end of the quarter, we will have hard numbers. At this stage, I think we are probably picking up certain feedback that is coming up from the system, which is partial. I'm not saying it is motivated, it is partial. And we should not be making decisions or assessments based on this partial data. I don't mean partial in partiality, that it is not complete data.
Understood, sir. Manish, I have one question for you. If there is a dichotomy, at least I think it's a dichotomy, where you have large, organized, listed companies that are doing really well, they are managing to gain market share, grow profits, but at the same time, you have small and medium businesses that have perhaps taken the blow on the chin. So, are we seeing, a difference in the way economic value is getting created in favor of the organized sector? Will this be good in the long term? How can we kind of contain the harm in the short term?
I think one of the reasons India is poor is that our 63 million enterprises, 12 million of them don't have an office, 12 million work from home, only 1 million pay social security. But we only have 22,500 companies with a paid up capital of more than 10 crores. So I think, the US economy is 8 times our size and it has 23 million enterprises. So I think, positioning, sometimes MSMEs are an important part of the economy, but I think we should have 30, 40 million enterprises if we want to raise our per capita GDP. See, GDP is related to population, but per capita GDP is related to the productivity of the firms, individuals, and regions. So yes, I think that the big are getting bigger at some ways. The formal and informal gap is increasing. But as an economist, or as anybody who wants to make India less poor, you will see that as resources, business, employees all gravitating towards higher productivity enterprises. So yes, there is some short-term pain, but I think this is short-term pain for long-term gain. I think any informality is the slavery of the 21st century, and getting our the Raju Chotu is not where we want to be in our labor force. We want to have more formalization of our labor force because that implies higher productivity. So yes, there is some short-term pain, but that started with GST, that started a long time ago with higher regulatory enforcement and many other steps taken over the last 5-7 years. So I think the policy objective of formalization has been accelerated by COVID, and I think in the long run, that's good for India.
Right. We are also getting a lot of queries from viewers. Kiran, if I can throw this to you, are there any sectors that have seen permanent impact of the pandemic, or will all sectors eventually go back to pre-COVID levels or pre-COVID phase?
I
Yeah,
didn't, I mean, your
shall I take that question? I think
Yeah, yeah,
we by now know which sectors are under stress. And that has been talked about for a year, and that stayed constant. Initially it was some part of real estate, but that has come back nicely. I think hospitality certainly is under pressure. Travel, tourism is under pressure. I would think that this is where most of the pressure is. Now, whether they will come back, they will certainly come back because these are key parts of economic context. However, do they have the depth, financial strength to come back? We will need to assess that. And how will they get their equity built up? I think in the end, we will need to see. But certainly, all of these industries are required going into the future.
right. Kiran, this one is for you. We spoke about, the government giving a fillip for domestic manufacturing for the pharmaceutical industry. We're getting a question on whether we have enough skilled talent for that. How can we build for that or prepare for that?
So I think basically I believe that we do have a fairly large talent pool when it comes to biopharma. Of course, you can always make a point for more specialized skills. I think we do have the wherewithal to expand this sector. I do believe that this is a very capital intensive sector. So I think access to capital is extremely, extremely vital. And I also believe that, we need to basically focus on not just, expanding our present base, but also to aspire for value added growth through R&D. I keep taking that case. I really think that that's the way we need to grow this sector. If you look at, this the startup sector in our particular area, I think there's a huge, huge number of incubators with very smart companies. But again, I think they're starved because of access to capital. And I think that's where we also need to focus on, because I think there are many, many parts of the technology sector that needs access to capital. And in many of the world, of course, there are many, many models of accessing capital to grow. And in India, somehow we still haven't found the way to address these needs. So I think we really need to look at that, because otherwise they'll keep remaining stunted instead of going into the kind of companies that Manish was trying to talk about. So that to me is really the big challenge we have today. But I think in terms of whether we have the skills, I think we do have the skills.
Right. Manish, a question for you on the labor codes getting pushed, the implementation of the new labor codes. What impact is that going to have?
I mean, obviously, at this point, you're trying to ensure that unemployment doesn't lead to hunger, debt, disease doesn't lead to death, and, bankruptcy doesn't happen for companies. So I think the longer term issues have been pushed back a little bit, but they are back on track, at least over the last, few weeks. It has been recognized that labor codes, since they have already been notified and passed, are low hanging fruit. So I think over the next sort of 45, 60 days, you'll start seeing some more action on the labor codes. And I think we have to expand the labor code project to a compliance project, right? We have 67,000 compliances with 6,700 filings across central and state governments for all corporate India. I don't think that makes sense. If you want to make India a fertile habitat for China factory refugees, which really have recognizing that Thailand and Vietnam are subscale, I think India's brand is more damaged because of the stupid regulatory cholesterol that we have. And I think the labor codes are an important first step, and I hopefully we will expand the labor code project to a compliance project, which will get rid of almost sort of rationalize, digitize, and decriminalize India's compliances. And I think that is actively being worked on. The first state, Punjab, just 2 months last month abolished 497 compliances. About 12 ministries are starting to work on that. So I think we're getting back on track with that project too.
Right. Mr. Kamath, a question for you on, again, the dichotomy that we are seeing between the euphoria in public markets, the Sensex and the Nifty hit a record high today, with the fundamentals. GDP is down, inflation is rising, unemployment, at least the numbers that were given were up. And we are also seeing this euphoria in the private markets, nearly 15 unicorns in the first 5 months of the year. We are also seeing internet companies such as Zomato, Paytm, Flipkart listing with valuations of tens of billions of dollars. So how should one really, step back and look at this? Are there going to be islands of growth? Is the economic trajectory of India itself changing? Is internet going to be the next big driver?
I think two or three questions there. I'll take them in iteration. The first one is what's happening in the market. I'm no market expert, so I will look at it from a slightly different lens. But if you look at what has been the performance of corporate India the last quarter, that was a blockbuster quarter compared not to last year. That was a bad quarter. You compare it to the 2019 last quarter or the 2018 last quarter, this was still a blockbuster quarter. And I think the blockbuster good news keeps coming because I'm just looking at April IIP is at 135%, and the consensus was 105%. So I think there is something happening at the ground level, the momentum that is which is keeping it. Second, I think the market is also factoring in the sort of efficiency gains that corporate India has gotten out in the last 1 year. Again, nobody talks about it, but when I talk to, let us say, a larger cross-section of industry, clearly are talking about 15 to 20% productivity gains that they have been able to claw during the last 1 year. Initially, it was through imposition because they had to improve their process to survive because there was no other way to keep the factory going. But then they internalized it and they kept it as, I would say, the norm. So they are now able to run much more efficiently than they did earlier. Again, if you look at numbers, look at this quarter, last quarter's profitability. It is a blockbuster profitability. Again, I'm using the word blockbuster too many times, but truly this is reflecting what is happening in the system. I think the market has factored all these things. Has factored in that the pain that was there last year, we were able to bear it and we came out so strong. This time around, probably the pain is not as severe as last time. And the last point that I want to make is, I would think that the policy steps that the government and the Reserve Bank took are conducive. There is no confusion. The Reserve Bank governor clearly indicated that through the year we will look at keeping liquidity in a good shape. That's a big statement. I don't remember having heard that sort of statement ever earlier. It's a bold statement, and you have stuck to your gun through the year. And I think also there was reference that we will keep interest rates in a manner at a point which is fine, and everybody took it as 6%. Indeed, it has not been 6%. I don't know whether the Reserve Bank explicitly stated that, but they said that the interest rate will be conducive, and they have kept interest rates low. Liquidity is, as I said, flush, and your competitiveness has increased dramatically. Just to put it in context, if 20% competitiveness is an improvement in productivity, and this is something that in real terms takes over 10 years to achieve, and at a huge cost. Here, basically, in the period of a year, you have plotted out. Now, I would think that that is what is being rewarded by the marketplace. That's what I would like to believe. Of course, if there is a severe third wave, the market will correct itself. Now, on the digital front, I think, as I said, there is one more driver of growth for India, that is the digital super cycle. And if people believe in that, indeed, valuations are going to go up. Now, are all valuations fair? I don't know. Again, I am no expert in this. Some valuations may be right. There may be some fluff in it. But we will see as we go along who are the winners and who are going to be the. But the trend, digital as a driver of the economy, I think is here to stay. And as a consequence, we will have companies which will grow. And I would think that pharma companies, as a trend, here to stay, and they will grow. IT companies, because the whole world is getting re-rated on their own IT platforms. That is, they are now forced to rebuild. And where do they look out? I think they have to look out to India. So there are a lot of sweet spots within India. Digital super cycle, the pharma that we've seen, the IT thing that we have seen, Indian corporates in all other areas which have gotten significant productivity gains and improved competitiveness against a few sectors which are in pain, against a mass of people, a good mass of people who are in pain, who will need a helping hand. This is India of today. But I would think that I see a large part of positive in this. Some small challenges which I'm sure will be addressed between the policymakers and the government and the companies themselves.
Sorry.
Manish,
Yeah. Sorry.
no,
Manish,
I
you want
just
to
want.
comment?
Oh.
Yeah, Kiran, go on.
No, I just wanted to say that I think this is a time where we really have to free up the regulations, because I think we are very over-regulated as an economy. And if we can actually free up regulations, this is the time to do it. This whole bit of self-certification and, minimum and maximum governance, this is the time to really try and test out that model, because I think we really need to get rid of half the regulations, which is really slowing down growth. And many sectors which are pained right now can benefit a lot out of less regulations.
Right. Anything in particular you think the government can do, Kiran? I mean, immediately, of course, on a long-term basis, there are many structural reforms that we need. But if there are two, three areas that you think the government must look at immediately, what would they be?
Well, first and foremost, obviously, as I mentioned, it starts with structural reforms and it always starts with regulations. And I think we do need to do regulatory reforms in every sector. The second thing, obviously, is that we need to beef up our infrastructure, because that's also extremely important, and that also leads to a lot of inefficiency in many parts of the business environment. And I think the third thing is really about, which has happened now, access to capital. But I also believe that we need to create, access to capital for smaller companies as well, because I think they are the ones who really find it very difficult to access capital. I know many small companies find it very difficult to really grow, because they find it very difficult to access capital.
Right. Manish, in terms of the measures that we need to take to skill India to kind of take advantage of the digital super cycle that Mr. Kamath mentioned, the growth that we are going to see in IT, pharma, in other emerging sectors, what will it take, and how can we really create jobs at scale?
No, I think education has the biggest upside of this tragedy, right? Because learning while learning, learning by doing, and learning with signaling value. Degree apprenticeships, which have been illegal in India for the last 50 years, are finally being considered because learning while learning was a key component of skilling. Board exams being cancelled are a tragedy for the current batch, but you could never do education reform or curriculum reform without assessment reform. We need to move to continuous assessment rather than one big exam at the year. And that's really what COVID has forced. So my view is that the new education policy 2020, which was chaired by Mr. Kasturi Rangan, really had all these ideas. It had Gandhiji's Nai Talim, which he talked about in 1936. to talk about creative experiential learning. But in the 1948 Radhakrishnan report, nor in the 1968 Kothari Committee report, nor in the 1986 National Education Policy was it there. So my sense is COVID is a wonderful opportunity to just bring down the glide path for the new education policy from 15 years, which was proposed by that report, to 3 years. And if we do that, the school system, the skill system, and the college system, which has had huge learning loss, but also adapted to multimodal learning, adapted to qualification modularity, will really be India's opportunity to stop just talking about a demographic dividend. A demographic dividend doesn't mean kids, it means skilled kids or educated kids. So I think just accelerating the new education policy's glide path from 15 years to 3 years would be the biggest decision we could take.
Right. Mr. Kamath, the same question that I had for Kiran. If there are 2 or 3 things that the government can do, to kind of expedite the recovery process, rebuild India at a faster pace, what policy prescriptions would you share?
I think I am with the other panelists that basically a lighter touch regulation. I think the government itself has acknowledged this. I heard Honorable Prime Minister talk about it, that we need to do away with a lot of these things. And can we accelerate the doing away? I think is what I would say is the key to unleash the energy of the system to contribute to the national development process.
Right. Kiran, what percentage of the population would we need to vaccinate to kind of see revival or growth? I mean, is there a metric to follow here? What percentage of the population needs to be vaccinated, you think, for India to be in a better place compared to where we are today? And what are the challenges?
Look, I think basically we need to answer this question very differently, Chandra. First and foremost, I think we must understand that we are in a stage of vaccine inadequacy. So, how do you deal with, this vaccine inadequacy, and who do you vaccinate? When do you? How fast can you vaccinate? I, for one, believe that the urban centers should take priority at this point in time because they are the gateways of infection. They are the ones who are actually spreading infections to the rural heartland of this country. So, if you can actually stop the spread, contain these urban centers, which are the densest urban centers, if you can vaccinate 70 to 80% of these urban centers, I think you will actually find a lot of benefit out of that. Many parts of the world who have done this actually have benefited greatly. Even in the US, you can see that most of the big urban centers have gone in for very high levels of vaccination. Where they are really now focusing on are the rural heartland, where of course there's a much higher vaccine hesitancy. I feel that in urban centers, the vaccine hesitancy is much lower than the rural areas, which is why I think we should focus on urban centers and vaccinate as many as we can. And with the kind of availability of vaccines that we have today, well, that's a very smart strategy, I feel, that we should quickly get on top of. And as vaccines become more and more available, we should obviously try and vaccinate as many people as we can around the country.
Right, right. Mr. Kamath, I wanted to come to you in terms of the measures the government needs to take to kind of spend. Does the government have the fiscal headroom at this point? Some people are saying, the government should be spending more to kind of spur economic activity. But people are also saying that this could end up ballooning the fiscal deficit because we're already spending more than what was budgeted on vaccines and subsidies and other things. How can we kind of achieve a fine balance here?
I think from my point of view, we should stay with what was stated in the budget at the beginning of the year in February that we did. And I think we should be in good shape. If we've had a second wave, we will see what the negative impact of that is. We'll also see what could be the pickup in the economy as we go along. I think at this point in time, we should go ahead because we are also buoyed by the fact that the balance sheets are much cleaner than what they were. Otherwise, that would have been another problem. Capital market is providing all the support to corporate India that was required. So basically, the government spend should be on the lines of what they had indicated in the budget. There was some divestment to be done. Very, very interesting ways of divestment that were talked of. That should be accelerated. And I think the numbers will work themselves out, because the deficit number that was put out there, I think the government should be able to maintain. There is no, at this point in time, need to look at any increase in that number.
Right. Manish, we have a viewer question for you on payroll data. Is the lack of proper payroll data impeding our ability to assess risk? What can we do differently?
I mean, the lack of data is impeding everything we do in life. Of course, payroll data is impeding everything in life. But I'd be careful with modeling also, Chandra. You know, there's a reason we can't buy an air ticket for 2031. Because there's just too many variables. You can't buy. I mean, there's a lot going on. So I think a little intellectual humility by economists would also be nice. You know, they don't agree with each other. They don't agree with what they said yesterday. So I think we're facing not risk, we're facing uncertainty. You know, there's a distinction between those two. So I would say that yes, data would help policy making. Evidence-based policy would be nice. But COVID is not a kind learning environment where goals are fixed, rules are fixed, patterns. It's a wicked learning environment. The goals are changing, the patterns are changing, the rules are changing. So of course we need to hold everybody to account who modeled what was the difference between the first and second wave. But the virus has also been misbehaving. It's not doing what a second virus usually does. So I'd say that yes, more data is important, but let's just I think for me, the key lesson is let's just make ourselves stronger as a country, right? I mean, rich countries have handled or made COVID less painful for their citizens than poor countries. And so that should be India's lesson, that let's just, commit ourselves that over the next 20 years, we'll take our per capita GDP to $10,000-$15,000 from the 2,500 it is today. That's really the only way to handle a crisis is to be resilient. The only way to be resilient is to be strong.
Right. A follow-up question. Right. A follow-up question for you on the unemployment numbers. Do you expect the situation to improve as various states start unlocking, industries start opening up?
Well, what do you think unemployment is today? No, this unemployment numbers in India have the efficacy of palm reading or astrology. Let's look at poverty. Unemployment in India, because of 42% of our labor force who works on farms only generates 14% of GDP. So they are condemned to poverty. The only way to help farmers is to have less farmers. So 42% of India is technically employed, but they are condemned to poverty. So I would be very careful with the unemployment number. I think unemployment as in India, because of self-exploitation, because of huge farm employment, and because of labor force participation, is a very noisy number. So I would be careful. I would really want more better unemployment data, but I think we'll get back to the 4 to 7% number over the next 30, 40 days. I mean, unemployment on Sunday afternoon is 75%, right? Your office is closed. So unemployment in a lockdown is going to be 30%, so let's just calm down with unemployment and focus on poverty.
All right, Mr. Kamath, this is again a viewer question coming in for you on cryptocurrencies. Are cryptos the new moguls in the post-COVID era, or should one be wary of the crypto boom?
Let me put it this way. I don't know anything about crypto, so I will, I'm not qualified to comment, so no comments.
Okay. So, because there is a lot of back and forth between the government and cryptocurrency exchanges on what the way forward should be. Do you have a view, Mr. Kamath? Is it going to be a big disruptor?
I have not thought about it at all because I don't understand the currency. So I don't factor it into whatever thinking that I do.
Right. As we wind down to the last, 5 minutes, if each of you can highlight, the key challenges going forward, would it be the third wave? Would it be another unknown, and the key opportunities? Kiran, maybe we can start with you.
Well, obviously, what both the first and second wave has taught us is that we have to be much more prepared. I would like to see a lot more pandemic surveillance. I would like to see a lot more preparedness to see how we can mute the third wave, and we can. And therefore, I think we need to do a lot of surveillance post the second wave. And I, for one, feel quite confident that because you're going to do it hand in hand with vaccination, I feel that we will be able to mute the third wave. Because unlike the first and second wave, where you didn't have the vaccines available between the at least just after the first wave, we found it we were not prepared for the second wave. I think we were quite unawares, but now I think we can be in a state of preparedness to mute the third wave.
Right. Mr. Kamath?
I would again use a single word. I would say learnings. Can we codify the learnings that we have had over the course of last 1 year in all areas, starting with management of the pandemic, as Kiran said, shop floor level, what learnings do we have? At work from home, what learnings do we have? What learnings do we have on behavior? What learnings do we have on what we thought could happen and what happened and why and how did that happen, and improve on I think if we do all these things, we will not only be better equipped to face future challenges. Maybe this provides a new dimension to our entire growth going forward, because clearly there has been a reset, and that reset was at, I think, two levels. One is the physical reset on the ground consequent to the pandemic. The second is the reset of the mind that happened virtually in the blink of an eye. Now, I think 1 year ahead now, as of today, it's a good time to take stock as to what the learnings are and what this means to us going forward. What can we leverage out of this, and where do we need to understand more, work more, and get ourselves right? But I think we are in what we have managed the challenges pretty well, and we should be able to build on it going forward.
Right. Manish, the last time we spoke, you gave us a golden quote on, the darkest hour is before dawn. India is going to emerge stronger. What's your golden quote going to be this time around?
No, I think that we have lost 2 employees every day for 35 days during the second wave of COVID. There's no question that this has been a catastrophe. And the best way for us to honor these deaths, and there have been lakhs of deaths across India, is to really take advantage of this global reset that Mr. Kamath talked about and the domestic reset. China's just-in-time supply chains are becoming just-in-case supply chains for Fortune 500 companies, and India should take advantage of that. The domestic reset is the policy window, right? John Kingdon said when the problem, solution, and the opportunity comes together, support for change doesn't increase, resistance to change decreases. So I think COVID is really reducing the resistance to changes that we have known that we should have made to our labor markets, to our financial systems, to our infrastructure, to our education systems, to our health system. So the best way to sort of honor this, or to make, our new appointment with our tryst with destiny will only happen if we actually radically change India's ecosystem for formal, non-farm job creation. I think that's, it has to be formal, it has to be non-farm job creation. And I think in 20 years, we could easily be the world's third largest economy in total GDP. But we're 142nd in per capita GDP. We're fifth today. So we could reach the top 50 if we do all this. And COVID is hopefully, in my mind, people don't change for a better option. They change when you have no option. And COVID gives India really no option.
Mr. Kamath, we got a rather interesting viewer query. They want me to ask you, what do you think India's GDP is going to be 20 years from now?
Well, I would just give an arithmetic reply. What I would like to see is the GDP to compound at around 10% a year for 20 years. That's absolutely doable, because we are a country yet to be built. So if you're growing at 10% compounded, every 7 years you should double. So if I assume that we are at 3 now, after 7 years we should be 6. After 14 years we should be at 12. And 20 years we should be at 24 trillion. So that's what I see India of the future. If we realize and seize the potential that this country has got, because we are a country yet to be built for the next 20-25 years.
Okay, on that note, thank you very much, Mr. Kamath, Kiran, and Manish, for joining us on this edition of Money Control Masterclass. Some amazing insights that we will be reporting in the next few days. But thank you very much for joining us. And on that optimistic note, take care, stay safe, and thank you again for being part of Money Control Masterclass. Thank you
Thank
very
you.
much.
Stay well, stay safe. Bye-bye, my friends.